Hi, folks. Monday morning to all of you, and welcome back to another episode of FinMet Mondays. Thank you so much for tuning in. A lot of events that are going to unfold in the coming week. We have the US CPI inflation numbers on Tuesday, which is extremely key. And to top it up, we have the FOMC interest rate decision on Wednesday. Up till now, the consensus largely has been that we're going to see a pause in rate hikes in June, followed by a hike in July, provided that we continue to see the same labor market and inflation conditions. Sunil, if I was a jeweler or a trader specifically, and all these events play out exactly the same in the best case scenario, what would I expect the price outlook to be, let's say, in the coming 1 month?
Yeah, good morning, Shawn, and nice to be back. The overall situation, I think, is like we've been talking about. If the numbers come out the way we expect, we'll continue to see gold trading in that range we've talked about, which is 1940 on the downside and maybe 2000 on the upside. I think this range will get even more firm over the coming weeks. Also, getting into summer, some of the big hedge funds, some of the big investors would usually withdraw from the market, and so you'll see less activity in the market. So I think in the next few weeks, if there's no big surprises, we are continue to be range bound in that $60 range between 1940 and 2000.
Understood. I think a lot of these decisions are already priced in, so it makes sense why you might not see a lot of movement in the markets as well. But from a long-term perspective, I think everyone would also be very keen to understand how gold's price action is going to look. And I know you also attended the Asia Pacific Precious Metals Conference in Singapore, and I heard it was really an amazing experience. But what was the sentiment like amongst the participants that you met? What were their views on gold specifically?
I think two things stood out to me. One was there were a lot of physical players in the conference from Asia, right across from Dubai to China to Japan, including Thailand, Hong Kong, Singapore, and India. Overall, the sentiment from a physical demand point of view was very positive. I think people felt that if gold remained in this current levels, physical demand would be good, and they were gearing up for a good sort of seasonal period over the next 3 months or so. So that's why the sentiment was positive. As far as price action is concerned, we had several global analysts, very famous analysts at the conference, and the basic view that they expressed for the remaining period of this year was that the bias was on the upside. That means they expected gold to move upwards. They felt that the US dollar may weaken and geopolitical issues may remain. And so gold as a safe haven is going to benefit. And so they were looking at above 2000, maybe 2100 or so price levels by the end of this year.
Well, thanks, Sunil. A lot to wait and watch for this week, but definitely come next week, we're going to see some more momentum, a lot more views, and it'll be much more interesting to talk about come next week. So till then, see you and goodbye.